All right, let's get right into it. After an absolutely incredible run, the Japanese stock market just hit a massive speed bump. And, that sent a little shiver of worry across the globe. So, what on earth just happened? Is this a real warning sign or just some temporary turbulence? Let's figure it out. Boom. This is the number that stopped everyone in their tracks. Negative 1.77%. In a single day, the Nikkei took a serious hit. And after months and months of climbing, a drop this sharp has everybody asking the exact same question. So, is the party over? That is the billion-dollar question, isn't it? But you know how it is. The headlines only tell you what happened, not why. To really get to the truth, we've got to dig deeper. We've got to look at this layer by layer to see what's actually going on underneath it all. At first glance, the culprit seems obvious. A couple of huge AI stocks stumbled over in the US, and that panic just spread like wildfire, hitting Japan's tech sector pretty hard. It's a simple explanation, maybe a little too simple. The real story, as it usually is a lot more interesting. To get that full picture, we're going to use a framework from the analysts at Deep Policy Tech. It's called the four-layer analysis. And why this method? Well, because it helps us cut through all that daily noise and really systematically check out the market from four different and really crucial angles. This is how we're going to get a clear view of its true health. So I want you to think of this like we're detectives on a case. We're going to uncover four key clues, one from each of those layers. We'll start with the market itself, then we'll look at policy, then trade, and we'll finish up with the big picture geopolitical stuff. By the time we're done, we'll have all the evidence we need to deliver a clear verdict. All right, let's get our investigation underway with the first three clues. And we're going to start right at the scene of the crime, the market itself. This is where context is just everything. That one bad day suddenly feels a lot less scary when you zoom out a little. Look at this. Year to date, the Nikkei is still one of the world's absolute best performers. I mean, it's still crushing the S&P 500. This isn't a market that's in trouble. It's a market that's had a fantastic run and just hit a little bump. So here's where you can really see the difference between the headline and the actual story. The damage was almost entirely focused on a few AI stocks that had gotten, let's be honest, a little overheated. And get this, on that same supposedly bad day, more stocks in the index actually went up than down. This wasn't a broad collapse. It was more like a healthy shuffle, with investors taking some profits from expensive tech and moving into other areas. So, what's our verdict on clue number one? Well, the analysis gives us a score of 54.7, where 50 is perfectly neutral. And that confirms what we're seeing. The market's internal health is still positive. This looks like a healthy adjustment, not the start of a free fall. Okay, on to our second clue, policy. Now, there's definitely a bit more fear in the air. You can see that in the volatility numbers. And, hopes that the US Fed would start cutting interest rates are kind of fading. But here's the key thing. While money might be getting a little bit tighter, the overall financial conditions are still supportive. The sky is definitely not falling. And that lands us with a policy score of 52.6, still in positive territory. So what this tells us is the market isn't facing some kind of credit crisis. It's just coming to terms with a new reality for interest rates. It's a reality check, and yeah, it might be a little bumpy, but it is not a sign of collapse. Now for clue number three, trade. And this one is a bit of a mixed bag. On the one hand, good news. Japanese exports are up for the first time in 5 months, and supply chains look great. But on the other hand, exports to the super important US market took a dive, and there are signs that demand around the world is starting to slow down. So all of this kind of balances itself out, giving us a trade score of 51.3, which is basically neutral. The takeaway here is that trade is just kind of holding steady. It's not hurting things, but it's not really providing a big push forward either. Okay, we've got 3 clues on the board. Now it's time for the final piece of the puzzle, the clue from the world of geopolitics, so we can finally bring this all together and reach our verdict. Finally, clue number 4, geopolitics. So those long-term tensions between the US and China, they haven't gone anywhere. But there is a huge positive factor in play right now, and that's low energy prices. For a country like Japan that has to import pretty much all of its energy, cheaper oil is like getting a giant tax cut for the entire economy. It's a massive help. And that's why our geopolitics score comes in at 47.4, the only one that's just a little bit below neutral.
This really just reflects a simple truth. While those low energy prices are a fantastic boost, those quiet, nagging background risks are still there, putting a bit of a damper on things.
So let's look at our complete case file. When you lay all the evidence out like this, the picture becomes incredibly clear. The market's internal strengths, that strong trend and supportive policy, are more than enough to handle the weaker external stuff from trade and geopolitics. The foundation here is still really solid.
And that brings us to the final verdict. Based on the source's analysis, this drop was not a sign that Japan's rally is over. This was simply the Japanese market getting caught in the downdraft of a global AI bubble that was letting out a little bit of air. It was a pullback, not a breakdown. Okay, case closed on why it happened. But that just opens up the next big question, right? What does this mean for investors? What's the next move? So what's the game plan from here? Well, according to this analysis, it's pretty clear. First, get ready for some more choppiness in the AI sector. But more importantly, because Japan's fundamentals are still so strong, this pullback is seen as a buying opportunity. The smart play isn't to run for the hills. It's to look for good value in other areas that are set to do well, while maybe being a bit more careful with those really high-priced tech stocks. And all this really leaves us with one final thought. For you, in today's world, we're just bombarded with headlines and noise 24/7. So how do you find any clarity? Maybe having a structured way of thinking, a framework like the one we use today, isn't just a fancy tool for analysts. Maybe it's the most valuable thing any of us can have to make sense of it all. Thanks for tuning in.